Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and it's going to be such a data-heavy week, and the markets, in anticipation of that, have seen some rise across sectors here. I'll start with the crude oil prices, where we are trading at around 10-month highs even now. $90 a barrel continues to be holding, and that is because Saudi Arabia, Russia and US as well are looking at lower production going forward, and that has been supportive. Markets also are looking at the kind of data that we've seen come in from China, where the imports for crude continue to be on the stronger side. That has been supportive. And when you look at the prices itself, the last couple of months, the crude prices actually have seen one side trajectory here. It's also going to be the data that's coming forward from here. You have the OPEC and the IEA monthly reports coming in this week. OPEC comes today actually, and IEA comes in by the end of this week. So that is what the street will watch out for. The dollar index is another thing that the street is watching, and that's the number that IEA and OPEC both have talked about in sense of global demand forecast for 2024, where OPEC is way more bullish than what IEA is. But as I said, those latest number is something that we'll be watching out for the day-to-day there. And it's not just crude. Take a look at the metal prices, where there has been a smart rebound as well. The China inflation numbers coming in slightly on the stronger side. And then, of course, China also pushing way more stimulus measures. Smaller, far and few, but still on the track is what seems positive for the markets here as well. It's going to be about China retail sales and factory activity. All of that comes in on Friday. And then gold and silver prices also have seen a bit of a support come in, not too much, but here as well the street will watch for the US CPI data that is expected to come in. You also have the European Central Bank monetary policy meeting that's on Thursday. So there is whole hosts of events and data lined up for this week. How do you trade all of that space? For that, let's speak to Kunal Shah of Nirmal Bang. Kunal, hi, thank you so much for joining us. First of all, what do you make of all the data and the events that are slated for this week now, and which one would you be watching out for?
Well, it seems to be a lot of gray clouds in the sky, but at the same time, it doesn't seem like a storm. So that's a good news. Well, going forward, the most important data is definitely going to be US inflation numbers, and US inflation, mainly core inflation. Whether the core inflation is showing any sign of decline or not, that is something, what each and every market will be watching, because the food and energy inflation may have surged up. But if the core inflation has started to decline, then that's a good news for the market. And commodity markets too, shall react positively if the core inflation starts going down. Because inflation, I don't think so, will be that big a problem than the core inflation, that is excluding food and energy. And that is something, because the housing prices have cooled off a bit. So the majority of the inflation weightage in US is, given to housing. And if that shows, if the consumer spending have declined to a bit, then that will be the major event to watch out for during this week. And apart from that, like you rightly said, China is showing sign of stability. Rather, at one point, there was a concern that are we going for a free fall in the Chinese market, and whether that is going to spread across the globe. That was the major concern. But right now, whatever steps, like you rightly pointed out, the tiny steps, whatever they are taking, seems to be bringing stability in the Chinese market. The best indicator of that was the inflation data, which was continuously going down, has edged up and may edged up in this month also. So I think China is showing a sign of stability. US, there is no probability of recession right now. There can be a slowdown, but recession is way out. We should not talk about recession right now, the way the data have come in last 2 months. So broadly, things are looking stable, not very gloomy. A lot of dark clouds, like I said, but not a chance of any big storms.
All right. So while there are some hurricanes and storms that the US seems to be working with right now in sense of Atlantic, but we'll come to that later. I also want to talk about the crude oil prices to begin with, and we are holding 90. And all those reports that I've been reading, Kunal, suggest buying on dips even from these levels. Banks and brokerages are talking about 92 and 95. You've spoken about 100 as well. So what's your sense now, and what range can you work with for the rest of 2023?
So it comes at a wrong time, at the time when world wants inflation to go down. But Saudi Arabia and Russia, the way they've extended their production cut, I think the oil prices are going to go higher. So one has to understand, because the overall supply from the OPEC countries have been declining. It is deliberately, they are cutting the production deliberately in order to jack up the prices, but that is a decline. So we are not seeing production growth from the OPEC and OPEC plus countries. And on non-OPEC countries front, US was the only country which was registering the growth in the production. So now the growth of production was coming from two sides. One was from the shale oil, and one was US was selling their reserves from the strategic petroleum reserves. So that was leading to the higher supplies in the market, and that was one of the major reasons why oil declined from $100 to $65. But now those two reasons, the non-OPEC supply, mainly from US, is not about to go up, as the major shale oil producing basins seems to have exhausted, mainly the Permian Basin. Even to the certain extent, the other basins are not showing a sign of great production, despite of the higher prices. And production in US is going to plateau and slightly going to go down going forward. And at the time of the winter season, where the OPEC production cuts are continuing, this is not a good news for somebody who doesn't want to see oil at a higher prices, especially a country like India. But the fact is that oil is moving up, and slower production growth in US shale oil basins and the deliberate production cut by Russia and Saudi Arabia and the OPEC plus nations is definitely going to lead to higher oil prices. WTI is heading towards $95, and Brent is unfortunately heading to $98 to $100.
All right. Well, that's about the crude oil prices and inflation. Definitely not very big news there. But what's your sense also on the base metal prices? Because here as well, while we seem like we've made a bottom, but every rally seems to be getting sold into, every dip is getting bought into as well. And of course, markets are watching out for China and various data that we will see in this week. But any favorites here, and what is the underlying fundamental that you're watching here?
Yeah, so base metals, every time we see data coming from China showing stability, and everyone's try to celebrate, and prices moves up. But the fact remains is we are going to see this bouts of bounce in base metals, but we are not going to see any structural rally, where copper moves up by 20%, 15%, or zinc moves up by 20%. We are going to see the bounces. The main reason for that is China's economy, which is currently growing at 4.85%. Is not going to sustain this kind of growth levels, because they are old model of boosting the growth via construction, boosting and coming up with a lot of realty project, infrastructure. That is not going to come. So the growth rate of China is going to decline going forward, number one. Number two, we are not going to see exponential rise in price. And the most important reason why metals are not going to see a major rally, they are going to see bounces, the production side. So the production side of a lot of these base metals is improving, and people are not focusing on that. So next year, the refined copper production is going to at least conservatively move by 1 to 1.5 million tons. So that's a big number as far as the size of the copper market is concerned. So we are going to see right now in a short term, they may bounce back, but I don't see any big rally. So copper 750 on India, or zinc 225, 230 on India and MCX. That seems quite reasonable levels. But beyond that, I don't see any major rally or any major bull trend because of the structural slowing down of Chinese economy. Let us not talk about the free fall, but the structural slowdown will not lead to a great spike in metal prices.
All right, that point is noted as well. So among all of this, while we have seen the equity markets continue to run up, the gold and silver really do not feature into that smart money moving into this sector. What's your sense on this?
I think the gold and silver is on the cusp of really witnessing a new bull run. So the base, what we are seeing, $1,800, $1,900 base. I think this base in next 2 to 3 months, they are going to leave this base. So right now it's in a short range or narrow market where you see a $50 plus and minus. But the directional move from here is definitely on the upside. And my main reason is the monetary base of the global central banks have expanded exponentially as compared to the gold prices. So right now, each and every central banks are either selling US treasuries and they have been buying gold. That has been a trend from last 3 years. This trend is going to continue. And considering why central banks are buying gold, they seek refuge from the unknown, and that's why they are buying gold. And considering the monetary base, the way they've expanded, I think gold prices should go much higher. So maximum downside, I see 1880, $1890 in the near term. It can go down if the core inflation shoots up or something like that. But it is poised to move up 2 to 3 months down the line. And next year, it is definitely going for a big bull run.
Okay, so thank you so much, Kunal, for joining us for this. So buying in case of crude oil prices, definitely buying in case of gold prices there. But metals is a space that can see gains, but not phenomenal, and a crash clearly avoided or ruled out at this point in time.